things on the markets looking a little better this morning, in particular compared to yesterday. Asian markets, as we've just heard, rebounding. We do seem to be seeing a bit of a loss of steam when it comes to this global stock market sell-off. Nikkei in Tokyo, for example, climbing by as much as 6%. But let's take a look at the local market. Yesterday, we did see declines. The Dubai Financial Market General Index closed down 3%. Abu Dhabi Securities Index fell by 2.6%. And as you've heard in our business headlines, certain firms were the biggest losers. Talabat down by 9%. So what specifically is worrying investors? Joining us now is Mohammed Ali Yasin, founder and CEO of the Oracle Financial Consultancy and Investments. Mohammed, morning. Thank you so much for joining us. Hello, hello. Okay, so how would you characterise the sell-off yesterday? How bad was it?
It was bad. It was bad because we had the weekend. So we saw the worst was Friday, and we were hoping that Monday, yesterday, would be a better or a less volatile day. It started very negatively, and then Saudi opened up and it was negative. And then as Saudi's market started to improve during the day, go back into the green, we saw our market improve a bit. So we closed better than where we started. Many of the shares, especially some of the blue chips, recovered nearly 50% of their losses, still closing at a low, of course. And it's really something that it's sentiment driven, and this sentiment is just going across the world. And you just have to watch now. I think if you are someone who is watching the market for a long period of time, if you have some liquidity around, I think everybody is keeping that gunpowder ready to jump in at a certain point, but nobody knows when is the right time yet.
Well, exactly. And also, was there any rhyme or reason to why certain stocks were struggling in particular? Could you see the market thinking?
Yeah. Many times when you get like 3 days of drops, big drops, what you see is a lot of times is the leverage for certain investors start to hit the margin calls. So I think there was a lot of margin calls. The problem with the margin calls is that if you have taken margin on some of the less liquid stocks, what suffers is the most liquid stocks. Is you find that if you cannot sell or lower that leverage by selling those less liquid, so you go to the more liquid ones, you go to the real estates, the Amars, the Dars, you go to the banks, and therefore you see some of those that is suffering. That what we have been seeing lately. We've seen some recover better than others, but as you said, the latest IPOs have all been extremely hit badly, and I think it's because a lot of the people who went in there, many of them maybe did not go for the long term. They were hoping that they'll be able to flip it, and when they were not able to flip it, they had to keep a higher position than they wanted. And some of them, people decided, then that's what I'm going to try to drop at or sell if I can, whenever I can, and keep the winners. Unfortunately, that's not how it happens when markets are in such volatility and there's the fear factor, which is high. What you find is that the only ones you can sell is the blue chips, and that's what gets the investors suffer in their portfolios mostly.
Morning, Mohammed. Richard here. Very quickly, Lulu supermarkets in particular down yesterday, closing at, was it £1.18? It's almost 50%, 50, below its IPO price. Is this a buying opportunity?
Always. The low was 110 yesterday, Richard. So the problem is today, I don't think it's always a story, or it is only a story of valuations, Richard. This is sentiment and fear. And when there's sentiment and fear, you'll find some people selling at lower prices than what you think is fair. What you need to do is, if you believe that this is a fair price, or this is something that you're happy to hold for the longer term, you start to build a position. But you start to accumulate slowly, because everybody knows the saying, you don't try to hold a falling knife, and nobody knows when's the bottom for that knife to hit before it can bounce back up. Yesterday in the S&P, which is the most developed market in the world, you saw the market gyrate in about 40 minutes, about 8% between the bottom and the top before it closed, based on just small news, which tells you how sensitive the investors are today. I still believe that the wave of selling may not be over unless we get a change of policy or a halt of that policy. And until that happens and that is clearer, we should expect some more volatility in our markets. So investors should be wary of this, I think.
It was quite confusing how fast we saw that sell-off in Asia, because there wasn't actually any new news. It wasn't like there was a major announcement that came out. It was just this sense of the sort of the news ricocheting around traders' heads. This may be this acknowledgement that there might be a global recession. Is that why we're seeing such volatility at the moment?
Yeah. Yeah, the problem with the thing is with Asia is really, if you look at those tariffs, they are really the Asia is the most hit, and it is really to try to surround China and its countries around that make use of re-exporting of Chinese goods to the US, is to try to limit this and close that gap. And therefore, as China is our biggest, and Japan, of course, and South Korea, and some like they are our biggest clients in the GCC for oil. We worry that if there's a drop in the GDP growth because of those tariffs, and I've seen some reports from places like Bloomberg saying that the 54% tariffs on China may drop their GDP growth by 2.8%. That's a big number. And if that happens, that means demand for oil went down. And that's why you see also the pressure on oil prices. We are very much affected in the sentiment, and it's a bit of fundamentals also on the oil prices. So when we see them at around $60 per barrel, that is not a good place to be to continue the expectations of a GDP growth for our region. That's the connection we have with Asia at the moment. And that's why we want that to calm down, that kind of rhetoric that's coming from both sides. If that doesn't, we should expect that this will continue for a few more sessions, and therefore it's good to be cash and to be patient, but don't react just on every news that comes up, because we've seen what happens. Some of it is just fake news.
Mohammed Ali Yasin, founder and CEO of the Oracle Financial Consultancy and Investments. Thank you for your time this morning. Appreciate it.
The latest